LIC Mutual Fund, खुशियां जिंदगी की।
Why should you invest in LICMF Multicap Fund? If you want your investments to be multifold, a multi-cap fund can help you invest in growing companies across multiple categories. But what is a multi-cap fund? A multi-cap fund, as defined by SEBI, is an open-ended fund that invests its entire corpus in large-cap, mid-cap, and small-cap companies with a minimum allocation of 25% in each category, whereas the remaining 25% is invested dynamically at the fund manager's discretion. The weightage of mid-caps and small-caps in the benchmark index of multi-cap fund is relatively higher than that of any other diverse category of mutual funds. Introducing LICMF Multicap Fund. इन्वेस्टमेंट की यूनिक पहचान, तीनों फ्लेवर्स का रखे ध्यान। LIC Mutual Fund's investment strategy is a combination of top-down and bottom-up approaches running in parallel. To make investment decisions, our portfolio considers both qualitative factors like business sustainability, governance, and management, along with quantitative factors like competitive advantage, capital efficiency, and scalability. And a mix of these two methodologies assists in identifying appropriate valuations. However, when it comes to LICMF Multicap Fund, the key value add is how LICMF Multicap Fund adjusts the portfolio in line with changing macro variables in order to maintain a strong discipline, utilizing its in-house macro-based valuation check. Since macro factors have a bearing on stock valuations, it is critical to evaluate the impact of macro variables apart from company fundamentals. Interest rate represents the country's fundamentals. As a result, while building the portfolio, we can consider the interest rate as a proxy to assess such variables. This is why LICMF Multicap Fund considers interest rate as an additional check while building the portfolio. How interest rate helps in arriving at justified market valuation. In order to arrive at justified market valuation, we will first need the lower end and the higher end of market PE. To arrive at the lower end PE, we will consider the current interest rate. Assuming the 10-year G-Sec is trading at 7.2%, an investor investing 100 rupees can expect a risk-free return of 7.2 rupees. Since investors investing in equities take relatively higher risk, they expect to be compensated with higher returns. This is called the equity risk premium or ERP. Assuming the ERP today is 6.5%, the multiplying factor comes to be 1.9x. It means that the returns of 7.2 rupees are expected to be 1.9x or 13.7 rupees if invested in equity instruments. When we convert 7.2% return into its PE multiple, we arrive at 13.9x, which will serve as our lower end PE. This means investors investing in risky asset classes can expect to yield almost 1.9x of the risk-free investment, which is 26.4x. This will serve as our higher end of the PE band. Now the average of these PEs would give us a justified market PE at 20.2x. A PE of stock essentially tells us about the multiple at which the market is pricing a particular stock's earning. However, the stock's PE alone cannot be the driving factor for portfolio construction. Thus, we must consider the justified market PE with the portfolio's growth as well. This, in our case, can also be referred to as PEG. How do we construct our portfolio in LICMF Multicap Fund using a PEG? To ensure disciplined allocation within a market cap, a peg band helps the fund manager to rebalance or optimize the portfolio within a targeted peg tolerance level. Assuming the weighted average portfolio growth is 15%, we consider the justified market PE of 20.2x to define targeted peg as 1.3x. A margin of plus minus 10% helps to define the target peg band. This target peg band will serve as an additional check for us to ensure disciplined allocation. Hence, a fund manager is required to build the portfolio such that the peg at the portfolio level is always in a balanced state. And this is how LICMF Multicap Fund helps you to build your wealth in the long term. To know more, please consult your financial advisor. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.